What's going on, guys? Welcome back to another video. So in this one, we're going to be going over everything that happened today with Jerome Powell, how we've essentially gotten ourselves back into a very, honestly, terrible situation with the overall market right now, and how that pivot that everybody's been talking about over the last 2 weeks that have been running up the markets really wasn't all that factual. So again, guys, before we get into all of that information, if you do enjoy the information and analysis that I provide for you guys in these videos, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So let's get right into the chart here and take a look at exactly what happened with SPY today. So at 2 p.m., we did see the rate hike announcement and the report was issued. We saw that initial pop, but without any comments or guidance, this pop was really short-lived and we saw the markets tank down very significantly. Now, there was a lot of money to be made here. If you guys were on the stream with me, you guys did see the thought process behind the strangles that I was entering and exactly why I was doing exactly what I was doing. But again, when you take a look at this on the daily time frame here, we are starting to bend back around in the other direction. We just saw RSI break below its moving average. The MACD is losing this bullish momentum here as well, and we are now coming down to this key support level right around that 370-250 level. Now, looking at this on the 4-hour time frame here, well, we are seeing a potential 1348 cross down here. It is hunting that cross. We're seeing the MACD build that bearish momentum here, in the RSI well below 50. Now, I did see a statistic today that was showing that the markets this year have been moving incredibly volatile, over 7.5% per month in terms of up and down moves, and that is awesome if you are a trader. Now, again, a lot of people are taking advantage of this over here. Not a hedge fund with a 67% gain today on the portfolio. We have a lot of people really crushing it over here with 1348. If you guys do want to join and learn these skills and how to make money in this market with all of our proprietary trading algorithms, the alerts, the live streams, the curriculums, the options data, make sure you guys check out that link down below. It is the absolute best place to come and learn how to trade. Come see for yourself why we like to say that. The results speak for themselves at this point. But here is one of the things that I want to bring up when we're talking about this situation with Jerome Powell. Now, if the public expects that inflation will remain low, and again, we brought this speech up before, but this is Powell's speech from the Jackson Hole Symposium. If the public expects that inflation remain low and stable over time, then absent major shocks, it likely will. Unfortunately, the same is true of expectations of high and volatile inflation. During the 1970s, as inflation climbed, the anticipation of high inflation became entrenched, keyword there, in the economic decision-making of households and businesses. The more inflation rose, the more people came to expect it to remain high, and they built that belief into wage and pricing decisions as well as purchasing decisions. As former chairman Paul Volcker put it at the height of the Great Inflation of 1979, inflation feeds in part on itself, so part of the job of returning to a more stable and productive economy must be to break the grip of inflationary expectations. Now, that is sort of what Powell is trying to do with some of his statements in the Fed meeting and when he's asked these questions. Now, there were a couple of key responses that I want to cover with you guys as well. One, Powell did say that as of now, the expected terminal federal funds rate, meaning the maximum height that the federal funds rate is going to go, is now higher than what was expected at the time of the last meeting. Now, again, that expectation has been 4.5% to 5% for the federal funds terminal rate, and that is now higher. Now, if you look at essentially where we are right now in terms of the current rate, if we refresh this right here, this should adjust here. Yes, so the current target rate right now is 375 to 400 basis points. Looking towards December, there is a 56.8% probability that the Fed is going to raise interest rates by 50 basis points. Now, if we're thinking about a 50 basis point rate hike, remember what I've said. It doesn't necessarily matter how we get to terminal. It matters that we do and what that terminal rate actually is. Now, if the Fed then came out and said today that, well, we were going to be backing off these interest rate increases, then that would be a very significant policy decision, and I would designate that as a pivot. But what we've seen today is Powell sticking to his guns and saying, we're going to keep reading the data as it's coming in. The data so far unemployment data, the actual CPI numbers, PCE, and all of the other key data points are not showing signs of any significant relief in giving the Fed the ability to decrease the pace at which they are raising interest rates. Now, when we think about the pace, well, we're most likely going to get between a 50 and 75 basis point rate hike in December, and that is going to be a point of contention going forward. But with what was said today, we are not in the best spot in terms of where this policy and these rates are going to go in the future. The other very, very important thing that was said in today's meeting is the fact that Powell has reiterated some of the things that a lot of leading economists and people analyzing this market have said as well. The risk in this tightening phase that we are in right now is not that the Fed raises rates too much. It's that they don't raise rates enough and we continue to deal with these type of inflationary pressures in our markets. And here's what Powell had to say about that. In short, I'm paraphrasing here, but what he said was if we end up raising rates too much, we have the tools at our disposal to back off. Basically, if he raises rates too much, they're going to do a short-term wave of quantitative easing in order to get things back on the right track. Now, depending on how much that easing is going to last for, or how long that easing is actually going to last for, well, we could go into a period of prosperity, or they could overcook it the other way as well. And this is where that debate over the hard and soft landing comes in. They did say today, as we go into a higher rate environment, the window to actually get that soft landing becomes narrower and narrower, essentially saying that the odds of actually having a soft landing as rates continue to go higher is a lot lower. Now, again, speaking about data, we do have to make sure that you guys know everything going into the end of this week here. So it's still earnings season. So after hours today, we do have Roku, Qualcomm, Robinhood, Etsy. And after close tomorrow, we are going to be getting PayPal, Coinbase, Square, Twilio, Starbucks, Cloudflare, and Friday before open, we're going to be getting DraftKings. But that's not necessarily the most important part. When we come over here and look at some of the other pieces of data coming out, more jobs data is coming out tomorrow morning. Foreign trade deficit, productivity, unit labor costs, S&P US services PMI, ISM services index. But Friday is incredibly important. Non-farm payrolls, unemployment rate, average hourly earnings. If the unemployment rate comes in lower than expected, you are most likely going to see the probability for the December rate hike shift to being more weighted to a 50 basis point rate hike as seen right here to more a 75 basis point rate hike, and that could easily cause markets to sell off. Same thing with non-farm payrolls and average hourly earnings if they come in a lot hotter than expected. So watch out for that data. Again, you guys know I'm going to be in there with you guys on those live streams 8:45 to 10:30 every single day, breaking down this data for you. And again, if you guys would like to join there, make sure you guys check out that link down below. But other than that, that is going to wrap up this video here. If you did enjoy the information and analysis that I provided for you guys in this one, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening, made some money today. I'll see you in the next one. Peace.